Hello, Internet. Jim Baker here, talking to you from sunny Miami. I got a question the other day about how if my client has to pay any taxes in the U.S. for receiving a foreign inheritance, and wanted to make a video to expand on this. So, if you're a U.S. person and you're a U.S. citizen, you know that you have to pay tax on your worldwide income. There's all kinds of informational reporting. But you find out that you're going to either get a gift from your uncle who lives in another country or a distribution from a foreign trust because someone passed and it's passing to you and it's your turn to get distributions. And I want to go over how that's taxed in the US. So, from both standpoints, as long as there's no assets in the US and the foreign person was never a US person, it's not subject to any kind of tax in the US. There's no tax to pay. There are informational disclosures that you need to make, but there's no tax that will be calculated. So if you receive $10 million from your uncle who lives in Canada and he's never lived in the US, you just have to report that and do all the informational reporting surrounding it. And, if you inherited 10 million, you should probably pay someone to do it for you. And from there, you're good. If you don't report it, there's big penalties on that. So I got through that. The tax rate's basically zero on inheritance and distributions from foreign trusts as long as there's no U.S. assets being distributed, no U.S. source income, nothing U.S. If it's all foreign, there's no tax being subjected and being calculated. So in terms of the filing and the reporting, let me move this a little smaller. Form 3520 is used to report annual return to report transactions with foreign trusts and receipt of certain foreign gifts. So it's a pretty informational heavy form. If you're doing foreign trust, you have to attach a lot of trust documents. Owner of foreign trust, distributions to a U.S. person from a foreign trust. You have to date, description, property, fair market value. You have to disclose everything and say that it's not any kind of U.S. source income, basically. And then see so many questions here about this stuff. And then down here we have the one that's most common is just getting distributions from a foreign person. You just complete the form, and then part 4 is the only one you complete. U.S. recipients of gifts or bequests received during the current year from foreign persons. And you basically put if it's more than $100,000 you received, you have to fill out the form. So if your mom and your dad each give you $50,000, they're related parties, so it's combined, and you have to report it. I would always, when in doubt, just report it. It's all informational, and when in doubt, report more. Because if you are underreporting or not filing this form, for example, if you file this form late or incorrectly, then they would charge a 5% penalty, of 5% of the gift, and it's per month, and it goes up to 25%. And then if it goes even later and there's other penalties, they could end up taking the whole gift from you just in penalties of not telling them. So we always recommend that everything gets reported correctly. Depending on what you're receiving, then you also might have foreign bank account reporting obligations. You might have a passive foreign, like if you receive some funds or stocks, you might have passive foreign investment company reporting. You might have any number of things to report. And on here, I just printed this out from a really good article that I read from the tax advisor. These guys have good stuff. But these are just the main points here. The U.S. tax consequences and tax reporting for a trust are determined by the residence classification of the trust. So again, it's a foreign trust with all foreign assets. There's no U.S. tax. If there is foreign stuff, then it's beyond the scope of this video. Send me an email and we'll get into it. So a trust is considered foreign unless it meets the court of control. If it's a foreign trust, hopefully it was set up correctly. The trust is foreign. Again, this is still foreign, and it has no U.S. Real estate, no U.S. property, U.S. assets. And this withholding. Yeah, and then the same thing. The U.S. beneficiary is required to report distributions on 3520, and then maybe required to file 8938, and FinCEN Form 114, the foreign bank account report. And then a non-resident alien beneficiary of a foreign non-grantor trust may have to file a 1040 NR if there's U.S. assets in the trust that are distributed or anything like that. So that's the main summary there. We went over the exceptions and some of the penalties. So yeah, if you receive a foreign gift, make sure to report it, especially if it's over $100,000. If you're getting distributions from foreign trusts, it's a whole different story, but basically it has the same reporting requirements. And if you have any questions for us, I'm happy to go into more detail. Just let me know if you have any specific questions, and I'm happy to get into it. So I hope this was a little helpful, give you a little bit of video insight on how to report foreign gifts and foreign trust distributions, and we'll go from there. Thank you.